My name's Mike Bennett. I run the estate planning support team at Encore Estate Plans. And today we've got two advisors from Team Wealth and Tax. So first we have Jay Cole. He's a IAR and CFP with Team. Also, in addition to doing his financial retirement planning, he's also an enrolled agent, both the estate planning side, the tax planning side, and the financial planning side. He went to Regent University, graduated from there, and third generation people to work at a Team Financial Group. So that's pretty awesome to see a family-owned business like that, and absolutely killing it with what they're doing with Encore. And I can imagine what you guys are doing outside of your work with Encore. And we've also got Brian Owen here. Brian's a wealth manager, and he's in the technology space as well, a technology specialist. So he's there to help Team Wealth and Tax connect and build long-term relationships with the clients. And he assists with all of their computer technology needs, which for all of you on this call, it's probably one of those jack of all trades where other people don't know everything he does on a daily basis. But if he ever goes on vacation, he's probably missed quite a bit.
I can't travel too far.
Without further ado, this is going to be a very question Q&A type oriented session. Our goal at Encore is to give you some insight into people who are absolutely crushing it using Encore. And so Team Wealth and Tax, they've done over 50 estate plans with us. And we thought that they were very unique to bring on because in addition to their financial planning practice, they also have a tax practice. And so we're seeing a big trend in the industry of people who are trying to bring all of these abilities in one place or through partnerships. But Team Wealth and Tax has built out a process that we think could be very insightful for our teams. And so I'm going to just shut up and start asking questions and let these guys do the heavy lifting here. And so I'll start with you, Brian. How does tax planning lead to estate planning with what you guys are doing now?
That's a good question, Mike. That was kind of like the onset of recognizing our firm founders really who are more familiar with trusts and the necessity to have them. That was always kind of a conversation point when it comes to taxes and getting them prepared. It's like, okay, well, questions no doubt come up around like a will or a trust or, that kind of estate planning conversation. And being that our firm is what started off as an income tax preparation firm has really grown into also a wealth management practice. It just so happens that estate planning is always around that conversation around people's money. And we have a motto that we help you make smart choices about your wealth, taxes, and retirement. And it basically all ties together. That's where naturally when folks are, and I'll have to let Jay also share this too, being that he's an enrolled agent and he's directly facing clients when it comes to tax preparation. But being that they're already talking to us about their taxes and about their finances, the conversation just flows directly into estate planning is for some clients as well, especially if you've got net worth and you've got some assets you're thinking about.
Yeah, we try to be more of a holistic firm where it's not just, okay, we're going to shop you off to go get an estate plan or a trust done by so-and-so, go get your investments done by so-and-so, and we just handle the taxes. We want to handle a lot in-house, and clients really appreciate that. They don't have to go and seek someone here, go and seek someone there, but rather they can talk to us about a lot of these things, and they have a lot of trust in us. A lot of our clients have been with us since day one, and that's 37 years. And so we've built up a lot of trust in our community, and clients really appreciate that.
That's awesome. So for you, so when did you add, or I guess in what order did you, obviously you started as a pure financial planning practice, but as you started to do this, when did you start adding the tax planning and estate planning type pieces?
Well, we started as a tax preparation firm.
Oh, there you go.
Yeah. So we started off doing that initially. And through that, we would do tax planning as well. And we then built in the wealth management side. And from there, it wasn't until, Brian, you probably know this more than I do, but it wasn't until maybe a few years ago that we really started thinking about the estate planning side, and seeing companies like Encore could be a really good asset for us.
Yeah, it's true, because we had looked at other solutions prior to Encore and even used some of them. Proper disclosure, when we're dealing with people's income taxes, we're not just loosely pitching other things. There's a process to it when you're dealing with income taxes and IRS guidelines where disclosures have to be signed, conflicts have to be disclosed, all that stuff. So what we found was that as we were doing the taxes and we were growing the financial planning practice, that Encore really had a framework that began to make sense of how we could mold it and adjust it to work with us.
Well, thank you. I love it. So that's wow. And then I guess what were some of your biggest challenges in you talked about like disclosures. And I know that there's people on this call that are probably thinking about this, especially if they've never used any estate planning solutions before. But you talked about your disclosures with tax planning. How do you do with the unauthorized practice of law in estate planning? Like, how did you, I don't want to say get around it because we're not trying to get around it. We're trying to make sure that we steer way the heck clear of it. And so, how do you guys manage that process from a risk standpoint?
Yeah, so right off the bat, when we're talking with someone that's potentially interested in going down that road, we let them know up front we're not attorneys. We can't offer any legal advice. We can talk about general principles of how things work, but for like their situations, if they have these in-depth questions, then we might say, well, you might be best off having an attorney. But we just disclose that right up front that we're not attorneys. We can't offer legal advice. And if a client does want to proceed with us helping them in using Encore, then we have them sign an agreement, just really stating all those things as well.
Yeah, and that's huge. I think there's a misconception out there that we're trying to replace estate planning attorneys with the type of work that we're doing. And I mean, it couldn't be further from the truth. We definitely believe that there's estate planning attorneys are needed in a lot of situations that a software just simply isn't going to be able to handle. And you guys have probably heard me say this on occasion, but it's when in doubt, refer it out. The sales team hates me for saying things like that, but I don't care because it's ultimately we're all just trying to get the client to the right level of service. One of the questions that when we were asking some people, what would you want to hear about before this webinar, is what does your calendar look like for a typical client when you're trying to involve financial planning, tax planning, estate planning, all things, and knowing too that no one client, all the clients are not all going to be the same, but what does like a typical annual relationship look like with you guys?
That's a great question. I'll just share from the financial planning perspective of how we tend to operate, where if you think about the calendar year beginning in January, and usually in January, you're beginning your ramp up into tax season. Usually, if you think January, if there's any kind of like pre-tax planning or any kind of wrap up from the previous year's close, we're going to deal with that. Maybe if there's a review that needs to be done in advance, but usually, typically January through April, it's all hands on deck, tax season. And with that, for clients with financial planning and with the trust planning around it, sometimes we're going to do those review meetings at the same time or close to the same time, especially if the clients are traveling and they're maybe out of town and they don't come to our office except maybe once a year. So we're going to try to help them deal with the updates and all that in that tax season. But as far as, really what happens after that is what leads into more of those times to say plan to deal with the trust planning or the estate planning side that Encore helps us with. And it takes time to do that. It's not something that's a quick willy-nilly copy and paste one and done type thing. So we want to make sure that we're giving the clients the adequate time that's involved in that planning. So that's where we'll typically follow up with them, usually right after the tax season, if it's putting together a new trust or having to amend one that's already been done because there's been some major changes, or restate it. Basically, we tend to do that afterwards. And then the leading into the summer, we're kind of in the fight. We're continuing the financial reviews. We're continuing making sure the estate and the asset planning conversations are also taking place at those times so that we're not missing any loose ends or any assets that the clients have, forgot to talk about so that we can include those. And that usually leads into towards the back half of the year where it can continue with being reviews and follow up of tax extensions that need to be filed, or it's kind of those. We kind of frame it after the tax season. We really kind of like it's a heavy focus is on financial planning, estate planning conversations, or follow up, I should say, and then basically taking care of the other necessary responsibilities around wealth management on the back end of the year before the year's done. But yeah, Jay, how would you view that when it comes to our calendar?
You've summarized it pretty well. I'll add one caveat. If I have conversations with clients about trusts during tax season, it's always them that'll reach out to me like in May, because it's on a lot of people's mind after talking with them about that. And they'll be the ones to be proactive and reach out, at least with my clients.
Oh, that's interesting. And I'm always fascinated by this too. Fascinating is probably too strong a word, but I'm kind of a nerd. I've talked to people who have tax planning practices where they feel like they have to ramp up their employee level, like during tax season, and then they have to ramp it back down and kind of ramp it back up. But with estate planning being in the mix, I imagine that you guys have several people who can do multiple things. Am I wrong there? Or is that?
No, you're correct.
Yeah.
Yeah, all of our advisors can help out in doing that. And they usually
Yeah.
handle their own clients.
Right. And so so like if you have a financial planning client and then you help them with their tax return, and then so it sounds like, yeah, that made a like probably July window is like kind of the golden window for estate planning almost.
Yeah.
And so I guess what is your process for following up with those types? Well, they follow up with you. And so what happens at that point? So they follow up
Oh,
with you, and then what happens?
they'll follow up, and then basically we just kind of start the talking process, and we go through. We usually have an application, or I'd call it a checklist, but just a document for them to fill out. And so just gives us all the basic information of where they're at. Do they have a house? What are their assets? And just from there, we just start the process of doing it through Encore. And usually, if they're good with following up with us, it could just be a couple weeks or up to a month.
Well, and I imagine too that some of the heavy lifting's already been done, because if you're doing their financial planning, you have a bunch of their asset information.
Correct. Yeah.
Yeah. And if you've done their tax planning, you have some background information about like what things look like for them, like if they own a business, like you can tell a lot of that type of stuff. And so that it seems to be very efficient. So with your three core financial planning, tax planning, estate planning, is there one of those three things that leads to more engagements with the other, or is it all just kind of like, okay, there's about the same tax planning that leads to estate planning that leads to financial planning, like those types of things? How does that like kind of work in your guys' practice, or is it an it depends answer?
I would say tax preparation and planning probably is the one that leads into financial and wealth management, and then on that, estate planning. I'd say the tax is the huge heavy lifter.
Okay, so that's the primary, and which makes sense since you started as a tax prep and planning firm. I'm kind of curious now for others who've brought in tax planning, if that's going to end up being the case for them too, or if it'll end up being different. But um, wow, yeah, that's I'm all to hear like where clients ultimately come from, and I'm sure it all is amazing. But so if you're doing all these things, how many times are you talking to most of your clients?
You talk to them once during tax season, and then if they're wealth clients, talk to them throughout the year.
Yeah.
Probably 3 4, yeah. And then estate planning, I guess once they've done an estate plan with you, part of their wealth management type responsibilities with you, you'd be reviewing that stuff more periodically than most, I would think.
Yeah, yeah. And I'll add this too as a caveat. We try not to offer just estate planning to every single tax client, because we have tax clients that aren't investment or wealth management clients.
Yeah.
We try to focus that mainly on tax and wealth clients, or if they're somewhat thinking about becoming a wealth client, that's something we might talk about as well. But we try to keep that more limited.
I love that too, because, and this is again, terrible sales pitch, but here I go anyway. Whenever I say terrible sales pitch, it's going to be bad, but because you have referral sources outside of your own business. I mean, you probably work with estate planning attorneys who refer wealth management clients and tax clients to you. And you probably have CPA, oh, maybe not CPAs since you guys kind of started as a tax practice, but you don't want to mess up your centers of influence either. You want to be cognizant of those relationships. So I guess what I'm trying to get at with this for the people on this webinar is we're not asking you to try to do every single client through this. You got to pick and choose, where you're going to hammer on those things. For all of your clients, I'm going to take it a different direction. So you've said that like for some of your tax clients, in May, they reach out to you saying, hey, I'd love to get my estate plan done. What happens for the ones who you start the process and then it kind of stalls?
We've definitely experienced that. And yeah, we're to kind of like continue to go in the direction you're talking about there, but at the same time to kind of link what Jay was saying a minute ago. One of the things that's unique about us is that we're very boutique in our effort. And so what that means is essentially we're checking in with people. We're not just talking to them only once a year. And I'm speaking in terms of wealth management, estate planning. Let me just bundle that together. We're basically talking to them throughout the year. We're staying in touch. And when it comes to planning, say, hey, we're working with you on your trust plan here, and we've sent you the intake packet that we require, and we haven't heard back from you. It's been a month, we haven't heard back from you. Then we're going to follow up with them a few times. We're going to basically make sure, hey, you still want to do this? You still want to get this done? It's something where, and I know from hearing from other firms that are involved in doing this as well, that there's always that need for follow-up for some folks because they're just busy or they forget. And it's like, oh yeah, I do need to get that done. I need to get that trust put together. I need to get that asset information. And there's a need to follow up on it on our part. But what's unique is that our engagement process, a client who's going to work with us on having their living trust put together, there's a process where we're going to gather information from there in the form of a formal intake. We're going to sit down with them and talk about what it looks like as far as the people involved, the assets controlled. And then there's going to be an agreement that they're going to sign that, hey, we're providing this as a one-time service. But, at the same time, we're going to be obviously talking about if we're managing your investments and we're also putting together your financial plan towards retirement or in retirement, then we're going to be talking about those assets throughout our reviews and our years together. It's an effort where it's like, hey, the conversation's always going. It's not just here's the intake form and off you go and good luck and get back to me whenever you want to. It's really, let's follow back up. Let's help you. It's a desire to make sure that the clients take care of what they should take care of to make smart choices with their money. It always goes back to that for us.
Fair enough. You talked about pricing a little bit, and to the extent that you're willing to share, I'm not looking for precise numbers here or anything like that, but when the client comes in and does their estate plan with you, is there a one-time a la carte fee? That's what it sounded like. But what if they have AUM fees and tax fees? Do you package those types of things in any way?
Yeah, if we have AUM fees, then usually we'll waive our tax prep fee because that's value added with that. For the living trust, we do charge a separate fee for that. And so I guess it's taking our area out. To charge what to charge is kind of dependent on where you live, because we try not to be as expensive as attorneys, but not as cheap as if you just did it yourself.
Right. And that's a good sweet spot there, because we get that question all the time from advisors. It's like, how much should I charge? Team Wealth and Tax is down in Temecula, the Riverside area, so outside of Los Angeles. But I would bet that if you go to Los Angeles, it's probably a lot more expensive to do an estate plan there versus Temecula.
LA just does everything different.
Yeah, LA, yeah, there you go. Yeah, I'll leave that one alone. I'm a Northern California guy, so I've got a lot to say about LA, especially as a San Francisco Giants fan. That's just more jealousy coming out there. No, but that's versus if there's other places where it's going to be a lot cheaper. But I think there is a sweet spot there where we're not looking for the cheapest estate plan, but we want one that's good. And so that's where, we try to come in and say that we want our documents to be inexpensive, but not cheap. And there's a huge difference between those two things. But yes, it's hard to charge exactly what attorneys are charging when you're not providing legal advice. So I think you guys have found a really good. And then I love it though that how you said though that if you have AUM fees, that's going to include the tax prep, because that's encompassed in that.
Yeah. Generally speaking, yeah, there are some exceptions, but generally, yeah.
Right. And that's the cool thing about all these different services is you get to choose. Like there might be some clients where, well, wait, they're already paying us here at AUM. I want to show them my value this year. I don't need to charge more. And then there's others who, it's great to be able to do that. And that's the beauty of running your own business. That all makes sense. I used to try to say, usually it's about 50 to 75% of what your local attorneys are charging. But I don't know. If there was one perfect way to do it, we'd all do it the exact same way. Another question we got in here was, what happens if you have a client who comes to you with an estate plan and they just want to make changes to that estate plan, and it was not one that you've ever seen or touched or done? How do you guys handle that situation? I know how Encore handles it. I'll get to that, but I want to hear how you guys handle something.
Yeah, that's going to be largely to play on we're not lawyers, but to play on the lawyer's answer, it depends. It's like,
I love it.
Yeah, it's essentially, the Encore approach, and I don't mean to steal your thunder there, but it's like essentially we're going to probably restate the thing if we didn't put it together. It just depends on what's involved, what assets need to be controlled, who's involved. And then, of course, using that framework of asking those essential questions in the beginning that can filter out what we as financial advisors should take on and do versus what should really be passed on to a licensed attorney to take care of for them.
That makes a lot of sense. No, most attorneys aren't even going to want to do amendments to existing estate plans that they didn't touch. When I was in private practice, I never wanted to do that. I wanted to work off my own templates. And so that makes a lot of sense. I'm trying to think what other questions, or what, I guess, as you were getting this launched, what is one thing that was harder than you expected it to be when you were getting your estate planning path launched? And what was one thing that was easier than expected?
Go ahead, Jay. I'll let you go first.
Oh, that's a good question to think about. I guess one thing that was easy, just how seamless the whole process is, especially with working with Encore. It's very easy to use. If there's any questions that we had on how to fill out a certain thing, we got an immediate response, very helpful with just doing everything. So that was something I wasn't anticipating that.
Yeah, I'll say and this is where we kind of go back to our boutique operation, the way we like to interact with clients so that they don't feel like they're just another name and number in a system when they're engaging with us. Realizing that at first, oh, look, there's actually a framework provided with documents that we could either leave as is or we could white label if we want to. With Team Wealth, realizing that, hey, we actually can take this all the way through. And it's a process. Okay, let's get the intake information from them. Let's have them list out the accounts with the reference account numbers and what's needed for, say, the Exhibit A information. And then, talking about tangible property that they might want to have listed. And along with the other things, Mike, like you mentioned, is there a business involved, a business asset? Is there additional property involved? Having access to the documents to help collect that information and then note it has been incredibly helpful. And so what it has shown, I know for me personally, what it has shown me is this isn't something that we can just turn around and get done within a very short time of a few minutes. This is something where we need to sit down with the client. We need to engage with them, whether it's in person or on a call like this. And we're making sure to ask them the questions and have them fill out the information. And to make it an incredibly valuable service for the client, it involves us putting a little bit of time into it. And at the same time, to Jay's point, if we have a question about maybe it's a client that lives in a state that we're just not familiar with when it comes to something unique about a trust, we reach back to you and your team, and someone is always responsive and very, very helpful. So it really helps us with confidence. Hey, should we proceed with doing this one or should we pass this on to somebody else? Like an attorney, that this complements the boutique effort that we want to have with clients and be able to spend the time with them, build the relationship, build the rapport. This white glove approach has shown it, for me personally, it has shown me it's like, oh, this can really be done in a quality way for the client.
Yeah, that's awesome. So what's one of the difficult things then? Or what was the unanticipated difficult thing?
I'd say some of the questions.
Like what Brian was saying. So dealing with some of the questions when you're talking with clients, going through everything, especially more end of life stuff. Sometimes clients just don't know.
Like on the California Advanced Healthcare Directive, like the cold plug decision, it says it's so specific that it's going to cause your death within a relatively short time. And what's a relatively short time? And I used to hate that question. I don't know what a relatively short time means. And I find that one of the things I've heard is one of the unique things is making sure that you're providing information without providing advice.
Yeah.
Like that's one that I hear advice because you can provide information all day. When someone asks you that question, well, who should I have on my healthcare directive? Well, like, there are two kids, maybe, and the one's the right one, but you can't say, I recommend it should be your daughter or whoever.
Right.
But you can say, well, no, you need someone to make a difficult and what is obviously a difficult and emotional time, but is going to ultimately carry out your wishes. Yeah. And so, like, information versus advice are two entirely different things. And then one of the things I appreciated what you said in that initial answer is, if you're not sure, ask us. We'll show you how to do that in a way where you're not giving advice. And that's because, obviously we want you guys to steer very, very clear of any notion of unauthorized practice of law. So that's big no territory there.
Yeah. And Mike, that's a great point because it's on top of getting familiar with the resources that Encore provides so that we understand what unauthorized practice of law is and how to avoid that. Really having those conversations with clients or steering them if they have a specific question, steering them to if you will, the general application of this and what can be done, what can't be done, not giving them the specific advice of what they should do. That's getting more familiar with that and doing that just on a day-to-day basis. You just learn through that experience, how to navigate the conversation and be helpful, and then versus defer it to somebody else if they really need to seek professional advice outside of what we're supposed to offer.
Yeah. And that's interesting too, because even like beneficiary designations, I mean, you guys have CFPs, and I've heard people say that technically speaking, advising someone on beneficiary designations is giving legal advice, even though like you're clearly licensed to do it. But it's something where it's like, oh, well, you can still give them information like, okay, well, who should I name as a beneficiary on my IRA or a qualified account? And it's like, okay, well, is it going to be the individual or the trust? And just providing the information to the client saying, well, if you do option one, it'll be this. If you do option two, it'll be this. Which one would you like? For me, I've got minor kids, so I've named the trust as my contingent beneficiary because I don't want my kids getting it if something happens to my wife and I. But that's, just the education aspect of what you guys bring to the table with all these different things. It's an awesome model for others to kind of take note of.
Yeah. We'll tell people too, if they're not sure, we definitely lay out, well, it needs to be this type of person. We'll have them, hey, go home and think about it. We don't need to get this done right now, but if you're unsure, but go home and think about it.
Right. Have those conversations with the people. And for me at Thanksgiving and stuff like that, like it's my wife and I were just judging all of our family members to see who will be the best guardians and stuff like that. So that's another method. around the holidays. There is one other question here, and so I'm going to have a last call for questions. But I guess if there was one thing that you could leave everybody on this call with on, well, the title of this is How to Leverage Tax Planning into Estate Planning and Wealth Management Pipeline, but how to leverage all this stuff. What is one thing that the people on this webinar can take away from today, in your opinions?
So
sorry, you guys didn't get these questions in advance.
No,
so
that's okay. Yeah,
that's all right. Yeah,
it's good. It's funny because on the previous question, you made me think of something else too. But we can come back to that if there's time. But on this, I would say if you're involved in a firm and you're thinking about doing this, or maybe you're just getting started with it, I would say the biggest thing is do it responsibly. Definitely be careful with it. Read through everything. Understand how to implement a solution like Encore's. That way, we're careful not just to see it as a quick profit center or another means to an end, but rather is how can I genuinely help clients by providing this? How will this complement or value add on the other services that I provide? This is kind of the double-edged sword of a solution like Encore's, where it's like, hey, on the one hand, it's like, this is wonderful. The framework's here. The doorway's here. All I have to really do is open it and walk through. And it's like, boom, I'm there inside in the building. And we could be a very quick turnaround process to whether it's putting together a trust or a will for somebody. But the reality is we're licensed professionals. In our case, we're fiduciaries. So it's like we look at this as this is something we have to proceed with caution. We have to do this carefully and well for people and make sure that we're helping them think about the details that they may not be thinking about. I would say be excited about the opportunity to implement, but at the same time, please do it responsibly, because that's, and not just accountability, but it's like there's a tremendous amount of responsibility that falls on us as advisors that we need to be aware of.
Yeah, my biggest takeaway is just make sure you're disclosing everything and you have clients sign the right disclosures or consent forms, because that's a big thing, whether it's in the practice of law or the IRS. If you're a tax prep firm, you just want to make sure you have every type of disclosure signed before anything.
Yeah, what was that form number we were talking about before?
Yeah, this is an IRS form. It's a 7216. That's the Internal Revenue Code. And so basically that is a consent form where if you're going to talk to a client about anything other than their specific taxes, you have to have them sign that beforehand.
Perfect. Nice. You guys went from tax planning into estate planning. Could you think of any pitfalls from going into tax planning from the estate planning side? I don't know. I don't know that there is one, but I know that we have at least one caller on here that's asking about that. That he must be doing estate planning, but he's venturing into tax planning.
Jay, what do you think?
Just do it. Just do or exactly what we just said. The disclosures. That's the big one. It sounds like.
Oh yeah, disclosure is the big one. I guess just have a good understanding of current tax law.
Yeah.
Well, yeah, and hopefully, be staffed up with the right people so you can definitely do it. But okay, good. And then one other question that we got in here was around, and this is a strictly estate planning question, but how do you introduce yourself and or give comparisons to you versus an estate planning attorney when someone's coming to you for estate planning assistance?
Go ahead.
I was just going to say, well, just right off the bat, we let them know we're not attorneys. So that's the biggest thing.
Yeah.
And just say we can help them in preparing that with using a third party to help with that. But yeah, if they have all these questions, if they don't know what to do, then we would just say, or if they have a complex situation, then we would just say, no, you're better off seeking an attorney.
Yeah. When in doubt, refer it out. That's right. That's something I tell advisors all the time. And it's just not worth it. Because even disclosures and stuff like that. And I mean, that makes a lot of sense. Well, perfect. Anything else you want to leave people with? We do have a poll question that we can bring up, but it's more Encore related. So,
Mike,
our shameless plug.
Sure. I was going to say one thing that's worth noting. And back when you and I, a couple months back, did one of our sessions for our podcast regarding the benefits and challenges in dealing with this trust planning, but you made a point, and I think this is really critical for us as advisors to understand. And that is when we deal with providing the solutions that Encore provides, we're helping clients ultimately retain control of their assets. We're not doing any fancy trick to reduce or avoid taxes or anything like that. In California, that's always a popular question around property taxes. And does somehow placing a house in a trust avoid that? It's questions like that. We're helping clients ultimately develop a way to actually retain control of what happens to their assets once they pass away. And so that's one thing where it's like I would want advisors to understand that this is ultimately, it's about helping them see through the assets, not just through into their retirement, really beyond. And as they're thinking about that legacy planning, as that's been coined lately, we're basically providing a way for them to have that whole picture of what their wealth is doing now and what it's going to do in the future, and who's going to be part of that in the future when the initial grantors are gone. It's important to have that kind of life cycle view, or that whole view, a holistic view on how we're helping clients and how we're helping them getting practical with it.
Brian, Jay, thank you for taking time out of your day to come share all this stuff. You guys have built something really, really awesome. You're helping clients in so many different ways of their financial lives. It's a great model for others to learn from. And the fact that you guys are willing to come share this with our users and on this webinar, I just really, really appreciate it. So thank you both for being here. It's definitely a treat for everybody to have this.
Of course, absolutely.
Yeah, you're welcome. We appreciate it.
Of course, the shameless plug that I'm going to be throwing up here is for anybody who doesn't have a plan with Encore. It's very, very easy to sign up. You just go to encoreestateplans.com. You can book a demo with the team, and we'll send you a 50% off code for your first will or trust-based estate plan at Encore. And we'll also be sending a recording of this webinar to all those who attended. So this information will be up on the screen at the end of that recording. And if you do want to do a deep dive conversation with Encore, there is that poll question up there where you can do that. But we're going to give everybody a little bit of time back here today. I never like to see these things go an hour. But again, Brian, Jay, thank you so much. I'm hoping to make my way down to Temecula at some point. You guys have an underrated wine region.
Yes, we do.
Look forward to making my way down to that crawl. So,
oh yeah. Yeah, let us know when you do.
Yeah, we'll do. All right, take care, everybody. And thank you again for spending part of your day with us.
Yes, thank you.